Global share markets have had a strong night of trading. Data coming out of the US has indicated that US retail spending is up 1.6% through the month of March. Comments coming from the US Fed have also indicated that their economy is beginning to expand and the recovery is broadening, although at a very slow pace. The key question now is when the US Fed will increase their cash rate. If they do increase the cash rate at a time when our OCR is still at very low levels, this would push the New Zealand dollar lower against the US. However, we don't foresee that the Fed will change their rates anytime soon. The New Zealand dollar was trading at 71.40 against the US on Thursday morning. The US has signalled that they are going to allow Brazilian beef and pork exports into their market. This would be for the first time in 10 years and could be quite damaging for our own beef industry here in New Zealand. Recent negotiations suggest that the US will recognise one state as being free of foot and mouth from Brazil. This one state will be the only place that can export beef to the US. While Santa Catarina is not a big beef producing state, it does open the door for others down the track. It is not expected that beef will begin to flow until next year, thereby holding current US prices for the time being. However, if we do see Brazil get into the US market in a big way, this could be quite damaging for our own market as well as our own prices. The recent increases in dairy prices is very positive for the industry, but what does it all mean for local dairy farmers? It will be interesting to see if these prices can be maintained through the medium term. If they are, it is unlikely that they will have a big impact on this year's milk payments. The real benefit will come through into next season. Assuming that prices can be maintained at these levels through the medium term, we would expect to see payments increase to levels seen this year. We can't forget that Fonterra will be dealing with a currency that will average about 5 to 6 cents higher in the 2011 season than the current season we are in. This will have a dragging effect and will be an offset for the high prices we have been seeing recently.